Joining us now with his playbook for Q2 is Morgan Stanley Analyst Keith Weiss. Keith, thanks for joining me today. What are you thinking after the strong rally in so many of these names to start the year? Where would you be putting money to work right now?
Well, thank you for having me on the show. I am still a big fan of software here heading into Q2. Coming out of a really tough year in 2022, a lot of the pressures that we saw on these stocks are starting to alleviate. Investors were worried about rising interest rates. We're starting to get more stability there. Investors were worried about numbers coming down. Numbers proved more durable than feared. And on the other side of the equation, these stocks proved to hold on to their profitability better than most. The names you have on the screen there are all good examples of companies that have been able to continue to see good margin expansion. Salesforce in particular has a real pivot towards better profitability. I think that's still underappreciated in the stock. ServiceNow is probably going to show more upside in margins than people appreciate. And then finally, Microsoft is one of our favorite plays for the theme of generative AI, which a lot of people have been talking about. Microsoft benefits there, both in terms of their core Azure business being a foundation for generative AI, but also exposing it through a lot of their applications like Office 365 or Copilot on GitHub. They just have a lot of ways to win there.
So many folks, I feel like, are very bullish on Microsoft right now. Convince me this is not a crowded trade.
Right. So as excited as people are about Microsoft on the longer term secular side of the equation, I think there's an equal fear about the volatility that you see in Azure. Azure is what's called the consumption model, which means you need to see people using the software for revenues to grow well in there. In a volatile macro environment, those numbers have actually come down a lot. And there's a lot of investors, I think, that are still waiting on the sidelines, waiting for that Azure growth to stabilize. We think there's probably another quarter or two of Azure growth decelerating. In the back half of the year, you start to see price increases come into the equation. Some of this generative AI stuff could start to become more of a positive tailwind, as well as price increases coming into the equation. We think that stability will likely show itself more so in the September quarter, but you want to get in ahead of that. And that's the incremental catalyst that I think get more investors off the sidelines and more investors on board for the long-term positive story.
So whether it's Microsoft or ServiceNow or Workday, which I know you like as well, are they recession-proof?
I don't think anyone's going to be absolutely recession-proof, but if you look at names like a ServiceNow or a Workday, what you like about those names is it's a recurring revenue model, meaning these are 3-year plus contracts that customers get into with these firms. They focus on large enterprises, which tend to be a little bit less volatile, and their core systems that these enterprises use. ServiceNow and a Workday, they have retention rates, meaning when these contracts come up for renewal, they retain at over 97%. So the volatility that you're going to see in those models is going to be much less than anywhere else. That's part of what makes it our best picks. We think the downside risk is relatively limited. On the other side of the equation, again, these business models have proved to hold in margins really well. Their operating margins and free cash flow margins for a name like Workday are looking to improve in the forward year. ServiceNow already has good margins. They're looking to be stable. That helps you sustain EPS and free cash flow better than most.
All right, Keith Weiss. Several names for our viewers to consider right now. Thanks for joining us.
Excellent. Thanks for having me.